Grains like corn, soybeans and wheat are relatively cheap in the recent few weeks, and compared to last year they're significantly cheaper. Corn is around 23% down, soybeans around 11% down, and wheat is 48% down, basically half price since a peak last year in 2022. Let's have a look at more details. Let's actually see whether they are cheap enough for a bit of a bounce, at least in the shorter term. And for these bounces and declines, you know that I do like to look at asset price cycles. And there are several signs you can use to identify those cycles. For corn, soybeans and wheat, some of the signs are right here. Every cycle rally into the cycle top and a decline down into the cycle low takes place with a cross of the 50-day moving average for at least 5 days. Although sometimes when the moving average is quite steep, as in let's say November 2020 or perhaps early last year, that's when simply a test of the 50-day moving average might be enough instead of a cross for over 5 days. We also see RSI changing by at least 20 points, often by well over 20 points, and at the same time slicing through the neutral level of that, again with each rallying phase of the cycles as well as with each declining phase down into the cycle low. So based on these and some other signs, over the last 3 years since the pandemic lows, the corn cycles have lasted on average for 116 days. And of course the actual duration ranges somewhere around that average, with the shortest of about 63 days and the longest at 190 days. The signs we use to identify soybean cycles are somewhat similar, again a cross of the 50-day moving average for several days, unless that 50-day moving average is quite steep, a change in RSI of at least 20 points and a slice through the neutral level. I think I might have forgotten to mention Bollinger Bands when we were looking at the example of corn. We do have poking through the Bollinger Bands as one of the signs as well, and based on these signs the average cycle duration for soybeans over the last few years since the pandemic low has been around 118 days. With the shortest at 67 days in early 2021 and the longest at 166 days in late 2020. Similarly for wheat, the signs we use to identify these cycles in wheat are somewhat similar, with the average cycle duration of 116 days, shortest at 47 days over the last 3 years and longest at 189 days. So that's the longer term view for corn, soybeans and wheat. Let's come back to corn and zoom into what's going on right now. Corn is in a new cycle all the way since mid-March, and there is probably a pretty good chance, perhaps a 50% chance, that we have seen a cycle low in early May, a few days ago on the 3rd of May. Yes, that would give us a record shortest cycle over the last 3 years, but looking at history, if I remember correctly, there have been relatively short cycles, perhaps even shorter than 51 days long. There is also a 50% chance that this cycle continues down for another short while, perhaps just about a week, before a bounce into a new cycle takes place. So I think perhaps a bit of a short-term buying opportunity might be coming up, although there is high level of risk. And the upcoming bounce into the new cycle, whether it has already started since early May or whether it's going to start in another week or so after a lower low on price, that bounce is probably going to be relatively modest, perhaps just poking above the 50-day moving average for several days before going down into the cycle low. The outlook is somewhat similar on soybeans, with perhaps a little bit more probability of a continued decline for another several days before that bounce into a new cycle takes place. And again, while I might actually try to play this bounce with just a sort of play money with some beer money, I do think risks are quite high and perhaps this bounce isn't going to be that significant. Again, as I mentioned, perhaps a bit of a poke above the 50-day moving average for just a few days. Looking at wheat, the situation is perhaps a little bit more interesting, as this cycle has been going on for longer, for 99 days, so there is a pretty good chance that maybe we have seen a cycle low in early May. So I think it's more likely that we're going to continue higher from here rather than make a new lower low before bouncing into that new cycle. Although either of the scenarios can actually take place, perhaps the first scenario of a continued rally is a little bit more likely. But again, the risks are pretty high that the bounce is only going to be a modest one, followed by a prolonged decline down into the cycle low. After all, wheat gained enormous percentages back in 2022 and in 2021, and it's going to take time for all of these gains to be digested by the market. Wheat is probably going to bounce over here from that support zone around $6 on the wheat ETF. That's based on the July 2021 cycle low. But in the longer term, perhaps a bit of a rounded bottom before the markets digest those huge gains over the last couple of years. I don't really expect any fireworks the upside anytime soon. Moving on to market sentiment, again corn here. Optimism index is pretty close to that green line. It is currently at 35. So again, just as I mentioned, a cycle low is probably likely on corn sometime over the next several days, perhaps 1 or 2 weeks. The situation on soybeans is perhaps somewhat similar. The optimism index is a bit higher, it's at 43, but this green line, which shows where buying opportunities often take place, is also higher. So this optimism index has already dropped below this green line again. Cycle low is perhaps upcoming in another 1 or 2 weeks. And looking at wheat, over the last few days, this optimism index, market sentiment, has been pretty low, below the level of 20, and it's now at 23. So again, perhaps there is a 60% chance that we have seen the cycle low. Otherwise, a 40% chance for one more dip before that cycle rally can start. But as I have been warning you, this rally is likely going to be modest, as usually cycles do top sometime in the first half of June or into mid-June before a prolonged decline all the way down into August. That's based on seasonality all the way since 2015. And the situation is relatively similar whether you look at corn, soybeans. Again, usually we see a bit of a rally into the first half of June, perhaps into mid-June, followed by a prolonged decline all the way into late August. And again, the situation is the same for wheat. Perhaps a modest bounce into the first half of June, followed by a prolonged decline. And the seasonality picture doesn't really change significantly if you remove the year 2020 as a bit of a pandemic outlier. So to recap, if you want to play grains for a possible cycle low in early May, don't play with much more than some sort of beer money, as we don't expect any fireworks to the upside. And after only a short while into mid-June, seasonality winds are going to blow against you quite hard. For much more details, join us at myfinancesteacher.org, where we discuss a range of assets, including commodities such as grains, cryptos, energy, uranium, natural gas, crude oil. All of those are quite interesting right now. Of course, the precious metals and the general stock market, and perhaps one of the most interesting categories here are these juniors in metals that might provide you that additional torque, additional thrust to the upside if precious metals do break to significant new all-time highs, as I do expect them over the next couple of years. I've recently wrote about yet another promising junior in metals over here just a few days ago. So feel free to check us out at myfinancesteacher.org. For now though, hit that like button and share the video with your friends. Have a nice day. Bye bye.